Well, for more on the markets, I'm now joined by Ross Gerber, founder and CEO of Gerber Kawasaki. Ross, hi, thanks for joining us. Let's start with the Fed
My
then.
pleasure.
I know you think yesterday's rise was a mistake, but why?
Well, I think it's mostly that the Fed has raised rates so dramatically, it is having its effect on markets now, and even to the detriment of our banking system. And although they say our banking system is sound, what's really happened is that there's really hidden losses in our system of close to $1 trillion on bonds that banks and insurance companies have owned for the last 15 years. And that's why it's so important for the Fed to take more measured steps and not jack up rates so drastically, is because it can cause these unintended consequences. But I think the market and I think the Fed is done at this point, and 25 basis points isn't going to make or break what's going on now, because rates have moved up so much. And so we'll see how this plays out. But it looks like we're staring a recession in the face a little bit.
Do you think that the credit crunch caused by the banking problems will cause more tightening in the system and a slowdown of the economy regardless of what the Fed does?
Oh, for sure. I mean, this is more important than the Fed in a lot of ways, because especially where I live in California, where First Republic Bank is a huge bank here. We have tons of our clients have bank accounts at First Republic. They're a very well respected bank. Silicon Valley Bank as well, up north, like one of the biggest banks in California. So if you think about an economy like California, which is one of the biggest in the world, and having two of its biggest lenders basically go down, that will have a dramatic effect, because so many people get specialized types of loans from these banks that really understand the markets that they're in better than big banks like Wells Fargo or JP Morgan, which basically don't do this stuff. And so, there's a lot of impact from what's happening right now on lending to real people, real small businesses. And it's super bad what the Fed's doing to innovation in our economy. Not to mention just jobs for small business owners that are trying to just get by, and now their loans are in jeopardy, and boy, it sucks.
What do you make of how US regulators have handled the banking situation?
Well, so far I think they have done a horrible job, mostly because they're not sure what to do, and they kind of came out and said, okay, we'll back every deposit for Silicon Valley Bank. And now they're like batting around this idea of backing all deposits, which I think is a huge mistake. We have a system that's worked the way it has for a long time. And just because the Fed has created these imbalances doesn't mean that we should all of a sudden like create these moral hazards that will lead to much greater risk to the banking system if bankers have no incentive to be conservative at all. So, I think this is not a great time for the Fed or the Treasury Secretary. I think they're showing a certain level of maybe getting too old for their jobs.
Well, thanks so much for that insight, Ross Gerber, CEO of Gerber Kawasaki.